Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Rivian looks like it's on track to hit its 50,000 unit target for production in 2023. We recently got their production and delivery numbers for the second quarter. That tells us a little bit about what's going to happen from an earnings standpoint. That'll come out August 8th. So I want to dig into the numbers and then what we might be looking for in the second half of the year, especially as the dual motor R1T has started to come offline, has started to be delivered to customers. This is just one data point, but at least gives us an idea of what momentum looks like for Rivian. So that's what I'm going to dig into. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing, in the show notes for more great opportunities like Rivian. And I want to start with the release that came out over the weekend. This is Rivian's Q2 2023 release. They, like a lot of automakers, they announce their production and delivery figures at the end of the quarter. They don't do that on a monthly basis. You can see that Rivian produced 13,992 vehicles, delivered 12,640 to customers. That mismatch means that inventory will grow a little bit, but that's not all that surprising given the fact that there is a little bit of a lag between when a product rolls off the production line and when it actually ends up in a customer's hands. So this is only about a week's worth of inventory, so I wouldn't be too worried about that. This compares to first quarter produced 9,395 vehicles and delivered 7,946. If we just add those together, we get production of 23,387 vehicles in the first half of the year. Remember that annual production guidance, this is something that Rivian has stuck with for basically the last 6 months. They're expecting to produce 50,000 vehicles this year. That means that they only need to produce about 26,500 vehicles in the second half of the year, only need to increase that run rate of vehicles just slightly. So I think there's a possibility that Rivian could really blow that 50,000 number out of the water if they increase production in the second half of the year. We'll see what management has to say about that during the conference call, but that's a potential upside for the company. I also want to point out here that on May 25th, they announced that the first dual motor R1T rolled off the line, said that that would be delivered to customers starting in June. So that's potentially the kind of product that's a lower price point. It's going to attract a few more customers to Rivian's products, make it a little bit more accessible. What we haven't seen from Rivian quite yet is the discounting that we've seen from some other electric vehicle manufacturers. Tesla specifically is a company that has lowered prices really significantly this year and even to end 2022. So I haven't seen that in the truck market quite yet. And that really goes for internal combustion engine vehicles as well. Those are still maintaining their prices really well. But absolutely something to keep an eye on to see if Rivian needs to lower those prices or introduce even lower price points to drum up more demand. One of the things that I've covered here in the past is that Rivian has stopped recording their backlog. When they came public and when production was early on, they would report each quarter how many customers had put that $1,000 deposit down and what sort of demand did they expect for the future. They stopped doing that. And that was sort of a red flag to me because when a company stops reporting that backlog, that probably means that it's not something that they want to tell investors about. And then at the same time, we started to see that R1T vehicles could be delivered in as little as 2 weeks. Depending on where you were in the country, you could basically go up and get one at any time. That was after years of waiting for a lot of customers. So that's a huge change in the backlog story for Rivian. Now, the question for me right now is, does something like the dual motor R1T, do these slightly lower price points start to impact the demand side of things? Is there customers that were waiting just for that, just simply for that lower price point, didn't want to pay for the quad motor? That would be very understandable, but I don't know that we have the information yet to know whether that's exactly the case. So that's one of the things I'm going to be looking at during the conference call is how much do they talk about demand? It's a question that they've really sidestepped over the last couple of conference calls as analysts have really asked it directly, and Rivian's management has just kind of avoided it altogether. So from a production side, things seem to be going basically as planned in 2023. That's really solid news. The next question is, what does the demand side look like? And we'll learn more on August 8th when earnings are reported. What do you think about this from Rivian? Let me know your comments in the comment section below. Don't forget to follow Asymmetric Investing. Thanks for watching, everybody. See you here next time.